Hey, hi all. Good afternoon. Jay here. Good Sunday to you all. So I'm filming this on a Sunday afternoon. I actually have some errands to run later, but let's get to it. Okay, anyone wondering, this is my portable mic stand. Her name is called Cherries. Nice to meet you all. Okay, let's go. Okay, so welcome to Erebus Trading weekly stock market update. So some context about myself. I'm a day trader actually, but I do swings and position trading on the stock market for my own equity portfolio. When I say day trade, I day trade the Nasdaq and also the Germany index, so Germany 40 CFD. Okay, so as usual, not financial advice. Everything published in this channel is purely our own opinion. We are not encouraging you to do certain things or not to do certain things. Okay, let's get right into it. So I do not know what kind of format you guys want to see. So you guys, if let's say you have a preference for anything, you all can just type in the comment and let us know. But I did come up with a template which I think would be useful for my audience, which I'm not sure who they are yet. Could be traders, could be investors. Who knows, right? Here goes. We are not content creators, we are traders. We are just gonna put forward things that we think will help you make market in the help you make money in the financial market. So key updates. Firstly, I think we are in earnings seasons. I'm not really much of a earnings trader, but do think that I should let you guys be aware that yeah, we are currently in earnings season and there should be more volatility. And it's important to know, right, what stocks is reporting earnings the next week. So you guys can be aware that there will be more volatility for that stock. Okay, so to me, trading on earnings is essentially gambling. Why is because you don't know how the earnings results would be, and then even if let's say earnings expectation is met, the stock could still plummet even due to say forward guidance, for example. So personally, I don't trade earnings, but you do you, right? But just to let you know, we are in earnings season. Just some update on US-Iran war. Straits of Hormuz is effectively still shut despite the ceasefire. Um, although US and Iran stopped exchanging bullets or ammunition, as we will call it, Straits of Hormuz is effectively still shut because insurance and freight rates still remain very high, effectively that no ships there to transit through it due to such high costs. Okay, but equity market seems to be shrugging this off. As you can see, Nasdaq S&P 500 is at all-time high. There's no way that um valuations could reach this level without the Straits of Hormuz being open. But do keep in mind that the equities market is actually pricing forward, is actually more forward looking. So that is actually pricing that the Straits of Hormuz will be opening soon. Could be in the next month, could be in the next 3 weeks, next 2 weeks, nobody knows. But doesn't matter. I only trade price action. I trade what price tells me is doing, right? So it's pricing that Straits of Hormuz is gonna open soon. Okay, just some bonus topic, I guess. Will Singapore go into energy crisis? Answer is no, because our domestic consumption is actually very little, about 300 to 350 kBD. You can search this number and this is what you get from ChatGPT. For comparison, right, maybe countries like China, they take about 15 million barrels a day, so on and so forth, right? So we are actually very small. No worries, we might need to pay higher price, but that's about it, right? We are still in greed territory. So fear and greed is something I look at a lot. I tend to want to buy in extreme fear and then trim at extreme greed. Notice I use the word trim, right? Because it's important. It's more risky to not be in the market when it's more risky to not be in the market when it's in a bull run. So I'll never look to fully exit my position, but I can trim when it's at extreme greed, and then I'll buy heavy when it's at extreme fear, right? So we are still in great territory, still some room to run in my opinion. Next piece of news, Japan could potentially intervene in the weakening yen soon. So this is actually what BOJ actually came out to say. How this could impact the stock market is because actually a lot of Japanese, they borrow my currency in yen, convert it to USD, and then put their money into stock market. If let's say they intervene in the weak yen and yen strengthen, right, a lot of these people, they will actually have to unwind their US stock market position and then convert it back to yen, right? So this what potentially could have happened. I think in 2024 August-ish period, something like this happened, and it actually led to a say 10% sell-off in the stock market. Let me just see if I can pull this out real quick. Okay, I aim to make this video lesser than 20 minutes, so you guys bear with me, okay? Okay, so this is your Nasdaq chart, right? As you guys can see here. Yep, this is the July-August period. You can see a massive sell. It's due to yen currency trade unwind. Right, so back then the BOJ was trying to hike rates and the Fed was trying to cut rate. So it makes your yen carry trade less profitable, and then those people try to exit the trade. But because it's a very crowded position, meaning that a lot of people is in the same trade, so it's very hard to exit. Right, so when it exit, right, you actually cause such a violent collapse. So equities market plummeted, say 17%. Yep. So I don't think we will see something of that scale, but given that the market is so overbought, right, these events could still trigger a pullback, right, which is healthy in my opinion. Next piece of news, UAE exiting OPEC plus. Oh, sorry, just exiting OPEC. OPEC gave UAE a quota of 3.5 MBD, so you can search this out ChatGPT. UAE actually wanted to expand their production to 5 MBD, so this is 1.5 MBD of mismatch, which is a lot of lost revenue for UAE. So by 1.5 MBD, I'm actually talking about 1.5 million barrels per day. Let's say each barrel of oil costs between, say, $70, right? It's actually a hefty sum of money. So that's why UAE wants to get out of OPEC and then produce this amount. Right? And generally it's good for the world, right? Because higher supply, lower the price of oil, everything becomes cheaper, which is good. Okay, but I think a key thing to take note of is how will OPEC perceive this incident, right? Because OPEC historically they have been trying to support prices by cutting production, but then nowadays they have been cutting production to support prices just for producers elsewhere like US Shell, now UAE to actually ramp up their production and capture their market share. So will OPEC continue cutting their production? I wonder, but irrelevant, right? Ultimately, this should still point to higher supply for oil and then lower oil prices, which is good for the economy in general, right? So that's all on key news update for the week. Next, moving on to key macro indicators, I'll just go through the brief one, but essentially I have this here just to tell me a sense of the market, give me a sense of the market, how the market is trading, right? So today I'll be going through a Nasdaq, VIX, and then maybe Bitcoin. That's about it. Okay, so let me just pull out the chart quickly. Okay, so this is the Next 100 chart. So this is the chart I day trade, but it's very important to look at this chart to get a feel of how the equity market is doing for your stocks as well. Okay, so ever since the recovery on say the 1st of April, the market just went on the tear. In fact, it's quickest tear in history, one of the quickest if I'm not wrong. So it rallied up to say about 21% since the bottom, about there, right? So like I mentioned earlier that we are currently in great territory. Definitely the market is overbought. We will probably see a correction soon. Correction doesn't mean a reversal. So that's one point to note. Correction doesn't mean you fully exit your position. And a point to note, you can look to trim. If let's say we look at extreme grid, when we reach extreme grid territory, or rather that's what I'll be looking at. So market is definitely overextended. In fact, when we look at the VIX, right, you can see that the VIX is actually nearing a support level at say about $16-ish. Historically, when VIX come to this $16 level, right, it usually struggles to go lower and then it will bounce, right? So this is what I'm trying to call for as well. So I foresee a pullback being coming. And so for those of you which missed the initial run on stocks, right, you all can try to load out more on the pullback, right? So this is what I'm looking at for the VIX as well. Oh, okay. So in case you guys don't know, when the VIX spike, market crash. When the VIX start to go down, market will go up. Yes, correct. That's okay. Next, Bitcoin. Bitcoin essentially to me is just a risk, and it just tell me how risk on or how risk off the market is. Ever since it's bounced from say the 5th of Feb, I actually enter long here. I'm still holding. The market has been chopping, but generally I think the trajectory is up at least until this resistance zone of about 81,000. Then I foresee that it will face some level of obstruction per se, right? So but do keep in mind that this zone is huge, right? So it can go up to here, then reject, or it can go deeper, then reject, or it can go here, then reject. Nobody knows, right? We only can see how price action develop until here, but similar story to Nasdaq. Nasdaq I think still have some room to run up a bit more before the VIX that support, and then Nasdaq will likely correct down. Same thing for Bitcoin. Room to run out a bit further before some form of correction comes take place, right? So like I mentioned, correction is not reversal, right? So that's on macro indicator. Okay, then let's move on to the main story of the day, which is the sectorial indicator, right? So I think active traders, active investors, you guys will know that when you're open Moomoo, right? Or your Moomoo, your Tiger Brokers, your IBKR, right? When you guys you'll usually see a pool of green or a pool of red. Why? It's because the market usually move together. When the market index is up, right, stocks are usually up. When the market is down, stocks are usually down, right? So that's that. So my point of telling you this is right before you enter a trade, before you more for a trading purpose, before you enter a trade, right? Let's say you want to enter a long on say Apple, right? You time your trade perfectly. You still need to time it with the market. Okay, you could have the best technical setup on Apple, but if let's say the market turns on you, Apple that setup is gonna fail more often than not, right? So you want to time it with the market, but then market and stocks is what a beginner trader would look at, in my opinion, right? So there's actually something in the middle, which is sector, right? So the market is actually made up of many stocks, and each stock, right, have their own sector, right? So different sector, right, can have different strength and weaknesses at the same period of time. So that's why you hear about things like sector rotation, right? Not all sector move equally, for example. So for example, right, let's say we go back to Nasdaq, okay? You can see that Nasdaq is on a tear, right? That bit is obvious. But do you know which sector is actually leading the tear in Nasdaq, right? And the Nasdaq rallied like crazy, right? People will say, oh, Nasdaq represents tech, so tech should be rallying, which half correct, right? Because even tech, you can split it up. You can split it out AI, you can split it out semicons, you can split it out. You can split it out into software, cybersecurity, so on and so forth. And if you actually look, right, this is SOX Semiconductor Index. You see that SOX actually rallied one line up as well. So SOX has been the one leading the way in Nasdaq, right? So if let's say stocks start pulling back, right, you expect Nasdaq to pull back because its propelling engine is gone, right? But that's not always the case. Why? It's because stocks can pull back, and by right, Nasdaq should pull back. But if let's say there's a sector rotation to say other sectors, which is like let's say software or like say cybersecurity, for example, then the Nasdaq might not crash, right? In fact, before the crash, right, you guys can go back this. But before the crash, this entire consolidation over here, right, is actually the best prime example of sector rotation at play, right? So at some point during the up move, one sector led, then whilst other sector crash. While during the down move, one sector crash while other sector led, right? So end result is a range, and I won't say that a range here is not possible. In fact, it's very possible. You could may have another sector rotation, software start rallying, semiconductor stock start falling, right? So if you guys want to long, okay, so for myself, when it comes to equities, right, I tend to do long only. I can do shorts, but I just don't have the time to actually keep monitoring like this. So I just tend to do long. Okay, so these are this every week I'll try to go through this sector index, right? So these are my comments here by looking at the charts. But I'll just quickly run you through some of the key ones. So firstly, XSW and BUG, right? So XSW is a software ETF, right? Okay, just so this is the XSW chart. You can see that very obvious daily. This is the daily time frame, right? So it came down, break of structure here, pull back, try to go higher, came back, take out lows here, and then have a shift here. So people want to call it change of character, call it market structure shift. To me, it doesn't matter, right? To me, I call it shift, but I have very strict criteria for shift, which I might teach you guys later if I have the time. Okay, so to me this is a shift. So once it shift up, it found support at the EMA here and start bouncing, right? So I'm expecting that it will go up at least to this level here, but the recovery might not be full on straight up lah, right? So it might just be chopping then slowly, but bias is up definitely. So if I think software is going up, right, I want to look to long some software stocks lah. So for example, like it could be some of the key names I highlighted, so they are highlighted in this shade of blue, light blue, if you will. So CRM is one of them. Let's see if I can find anything beautiful. App is another. So just one quick one. Came down, break of structure here. Okay, just draw it up. Came back to demand. Came back to demand. Technically never shift, but because it haven't shift, right, it tap resistance sell down, came back up. Now this is a shift, right? So I'm potentially looking for it to go up, break this trend line, and then continue for longs. This is a potential setup. Let me see. I think what's worth pointing out is Microsoft. I really like this setup, right? So break of structure, come back to demand, mitigate very deep. Kudos to whoever bought here, insane. Um, have a shift here. Shifted, pullback. Now is to me. Now this is in a demand zone. So I'm just waiting for it to go up. Right. So Microsoft is one of the good value of money you can get here. It's very safe. It's not a speculative stock. Valuation is cheap, right? Compared to the overall market. And if let's say software indeed rotates, then Microsoft will definitely stand to benefit. So that's on software. Then now we look at cybersecurity. Okay. Very similar setup, right? So break of structure, came back down, shifted here, shifted here, found support at the EMA, right? Found support at EMA. Likely, I'll expect it to say start chopping, right? Start chopping, then get out, right? So same thing, same strategy. Once you think software is gonna go up, and you look at software name, right? So some of it, crowd, very nice setup, right? Break of structure, came back, demand, shifted here, now consolidating with the EMA as support, right? So I'm looking for it to break out, then slowly start going lah, right? Simple trade. I try to point out the most obvious thing because I think clean setup is the best. Okay, I actually took a long on PANW in a slight drawdown. But reason being that I'm pretty bullish on cybersecurity. I see that it rejected resistance here, came back, and then came back up. I think it's prepared to mitigate higher or deeper. So that's why like I decided to take along here. Then you see there's a pullback on the lower time frame, 15 minutes, pullback, shift up. To me, that's a go ahead sign for me, right? Then we have Akamai technology. Not super clean, yes, but there's a shift here, then start rallying up. But do keep in mind this is resting liquidity, which I think will get hunted. So personally, I want it to go down, then I'll look for entry up. Okay, that's on cybersecurity. Then next is XLY. XLY, same thing, right? Break of structure, right? This very obvious break of structure. This is the real structure. Okay. Break of structure, came back down, take out this low, and then reverse out. Okay, so usually in stocks, right, when you see this kind of thing, right, it came back, it went down and recovered like a lot, maybe beyond the 0.618 feet if you want a very strict criteria, right? Came back a lot and then reverse, right? Usually it's just a matter of time before it take all-time high, right? So I'm bullish, right? So then it came down to the 20 EMA, make a breakout of a flag or whatever you like to call it. It really doesn't matter. But so I'm expecting maybe at least a range bound environment. So actually not the most affect place to long yet, but something to look out for, right? Range bound and go, something like that. Okay, then next is XLC. Personally, quite bullish on XLC. Same thing, right? Yes, it break of structure, it took out the low by right, it should be a downtrend already, but it quickly reversed up again, right? So this almost like a liquidity grab. And then reverse out, to me, is a matter of time before I take here, right? Pull back to demand and then go to lower time frame, shifted up. See, right? 1 hour shifted up, 15 minutes shifted up. Very bullish on XLC. So you go see, take a look at some XLC names, definitely not Google, right? Google, yes, it's XLC, but it's crazy on a tear already. I wouldn't want to touch it. This, what is this? AT&T. Not super nice also, honestly. Not very nice, right? Yeah, no, not very nice. It's in a range. Yeah, not very nice. Maybe I'll remove this. I thought it was nice at first, but guess I was tripping. Okay, yes. I think Verizon will look pretty okay. There's a shift here, right? There's a shift here. But issue is, right, it already tapped resistance. So you all can see, right? This to me is resistance, right? So it shifted up. Second. Yep, it tapped resistance, rejected, went back up. So I need it to come back down, right? Before I can consider going for long. But not super nice also. Netflix, definitely, I entered a position last week, but the reason why this is not really a trade to me, so this is a position, right? Although I put the trade marking here. Why is because Netflix valuation is at insane, is insanely cheap, in my opinion, right? So that's why I'm looking to go long on Netflix, but I don't want to just limit order a zone and then just hold it to cut through. No. So I just want it to slowly start chopping, right? That's why I decided to go for it, right? So I'm still holding on to Netflix. Okay, then we are done with XLC. I think XLP is interesting. Okay, XLP very, very straightforward setup. In fact, I think it's the cleanest this week. Break of structure came back, make a flag to go down, failed, reverse, shifted up. Now it is shifted the structure already, waiting for a pullback and then go long, right? So that's on XLP. So same thing, I'll go look for stocks that would have interest me, right? CL, interesting. Breakout here, come back. Actually this entire area is demand lah. Okay, but doesn't matter. It shifted up to me, something like this, right? Uh, this one haven't shift yet, but found some support here. Not really the nicest to me. Don't recommend anyone taking it, but I might take it if let's say I see something I like. Next is what is this name? Oh yeah, PG. Okay, so it broke out over here, came back after such a long time, break out, then came back to retest here, right? I do think that there's room for longs, but probably I wouldn't want to hold it all the way to all-time high lah. Maybe I can take a quick long somewhere here and then go up, right? Of course, there's like dependent on my setup also. Okay, so that's what I'll do. Coke very similar setup lah. So to me, this is a shift already. Just waiting for it to pull back, then give me an entry. Right, just waiting for this dude to pull back here, and then on the lower time frame, I want to say scalp an entry, right? And then something like this, and then go up. Yep. Then STZ, I guess there's a shift here, but not really the biggest fan. Okay, that's about it. And then last one, XRT, right? Uh Same thing, breakout structure, came back to demand, shifted here. See, after it shifted, right? Immediately go up, right? Then that resistance sell down, but trying to shift up again, right? It shifted up. So to me, want to go tap demand and go up, right? So that's for your retail name. So same strategy. I think I'm sounding like a broken recorder, but you'll go to XRT, look for some XRT names, right? So I highlighted to BURL. I'm not really a biggest fan of this because haven't shift yet, but it's at demand, so we'll take a look. Then last one is 5. Okay, so I highlighted here, but technically haven't shift yet, right? See, haven't break this line, so nothing much yet, but still we'll be looking out for this too. Yep, that's about it. Thank you. If you learned something useful, do give us a like, subscribe.